Hello friends, welcome to the channel. It's been long. During this COVID time, things have changed and so has the market. And there is a buzzing word which everyone is talking about and you must have also heard. It's an IPO. Now, let's understand what IPO does and how it helps create a fortune in a very short span of time. Think about in today's market where banks are giving a fixed deposit rate of interest of 5 to 6% on a yearly basis, an IPO can deliver or double your fortune within a month's time. Let's take some big names which have recently come in the market like Burger King, Zomato. They have doubled the fortune of investors in a month's time. And that has happened because of the strong background of the company. So let's dive into how we can best utilize IPOs to make some profit and what are the things we need to do before applying for an IPO. Alright, so let's understand what is an IPO and how things work. So in our share market, there are two types of market which we call them primary market and secondary market. This is nothing to do with applying an IPO, but I'm just telling you just for your knowledge so that you understand how the market is divided into two sections. Now, the primary market is the market where a pre-launch happens of any company which wants to go public. What does that mean? That if a company wants to go public and files its wish to do that in front of the regulators, the allotment process, the price band that they select, it all happens in the primary market. Now, the day the share starts trading in the market where a normal public like you and me can buy and sell that share is called as secondary market. Now, let's take an example how company decides or what happens when a company decides to go public. Take an example, a company worth 1000 rupees decides to go public and it decides to make per share price as 1 rupees. So now the company has 1000 shares. Out of that, the company owners, the investors keeps a certain percentage of that share and the remaining percentage they decide to offer it to the public. That can vary with any numbers. Let's take an example that the company decides 30% of their total share they will offer it for the public to trade. So out of those 1000 shares, 300 shares are offered for a general public to trade in the market. So 300 shares you and I will apply through an IPO process, through a bidding process, and that is where the lottery happens and we get allocated with the shares. Once that process is done, the share or that particular company enters into the secondary market for regular trading. Now let's understand, there are so many IPOs in the market, which one to apply, which one not to apply, and what are the three things that I do whenever I select whether to apply for an IPO or not. So the three things what I do when I select a company for applying for the IPO. First thing that I always do is to check the gray market premium. Now you must be thinking, what is a gray market premium? It is a market where the big investors or the gurus decide, looking at various factors of the company, what is the gray market premium of a company. Let's take an example. When Zomato was launched, it was launched at a price bracket of 72 to 78 rupees. But the grey market premium was trading somewhere around 120 rupees, which gives you a fair bit of idea that the IPO is going to do good. Second thing, whenever an IPO is launched, it generally comes with a 3 to 4 days of allotment cycle. What I always do is I check the day 1 and day 2 subscription. What is subscription? How many people have applied for those 300 shares. Generally, I see if the day 2 or day 1 has crossed the 10x mark. So if 300 shares are allocated, the subscription has gone somewhere around 3000. So what does that mean? That the demand is more for that share from what has been offered to the public, which again gives you a fair bit of idea that it is going to give a good return on the day of launch. The third thing that I do is to always apply for the IPO on the third or the fourth day, because by that time I have a fair bit of idea of the gray market premium, number of subscribers. So I always apply for an IPO on the third and fourth day. Now, once we apply for the IPO, it is nothing that we can do to get that allocation. Allocation happens only via lottery. So if you are lucky enough, you can apply n number of lots. Generally, there will be a cap for the retail investors, but you can apply till that cap. But whether you will get those numbers of shares is completely depending on the lottery process. So there are some big IPOs coming up. Let's fasten our seatbelt, guys, and we will apply for some of the big launches which are coming in. I hope with this information you'll be able to take a decisive call whether to apply for an IPO or not, and this will give you a good return in terms of whenever you get the allocation. Do comment on the comment section and let me know which all IPOs you are applying. Also, please feel free to share this video with your friends and family members who are also planning to apply for the IPOs. If you find this useful, do subscribe and like the video. See you all in the upcoming videos. I'll try to bring in some more information for you all. Thank you very much.